Hello guys, my name is Alex and today we're going to talk about new interesting feature that was just announced by the LinTrade platform. So this feature is called Flat Market Protection and it's going to help you in different flat market scenarios when the price, like the closing price, is just 1 pips ahead from your opening position. So in this video I'm going to explain you what is the feature, why we've implemented it, and how to use it, how to set up. So all of the things will be covered in this video. So before we start, don't forget to subscribe for our social medias, ring a bell, and okay guys, let's go. So I'm going to switch to the platform and I'll start from the point. So the flat market protection is a feature which is can be used for FTT mode on the platform. So let's briefly remember how FTT is actually working and help us to understand what is flat market protection is actually doing and why it is so interesting feature that we wanted to highlight it. So when we are trading FTT mode, we need to determine whether the price of the asset will be higher or lower from our opening quote. So for instance, let's imagine that we're opening up from here, from this quotation trade with some trade amount with some trade duration. So in this case, after 3 minutes, so this is 3 minutes, we need to make a forecast whether the price will be higher or lower than this opening quote. So for example, we're trading upwards and we push this up button over here, we're trading up, and the idea is that the quotation in 3 minutes up ahead should be more than this opening up quotation. But there is some different scenarios over here. So scenario number one, we are okay, so we trade it up, price go up, and we have a successful trade with some profitability, in this case 82% of return. Another scenario, if the price will go down, so in this case we can lose minus 100%, or you can cancel the trade before the time reaches zero and save some amount of money as well. Also there is so this is option number one, this is option number two, but there is an option number three when the price doesn't change. So we started from the same price and we ended up with the same price in 3 minutes, or which time duration you choose. And the idea is that in this case, so this is plus, this is minus, and this is zero. So we don't lose anything, we don't gain anything. In flat market protection is actually enlarging this just one quote up to plus minus 1 pips up and down. So the idea is that we do have some range, not just one quotation, but a small range of the quotations when we will have the zero result. Meaning that if we enhance this, for instance, this is our starting point, this is our trade duration time, and this is our when the trade duration time ends. So there is plus minus 1 pips. So this is one tiny zone when we will have a zero results, which does mean that in any case you will have zero results in this quotation zone. So for instance, even if you're trading up and there is 1 pip up, so if flat market protection is not switched on, you will have a positive trade outcome. So you'll have 82 or 90-70% of profit. But in this case, flat market protection will give you zero results, as well as if we're trading up and this is 1 pips away in a minus zone. So the idea is that we need to be very patient and we need to understand how the feature is actually working, because like why we have implemented this one, because in the majority of situations, when you're trading on lower time frames, like using 1 minute trade durations, 1 minute time frame, something like this, there is a very common situation when the price is ending up with the same quotation. In the majority of cases, it ended up, from traders' point of view, with some negative result. Actually, like by statistics, it's plus minus the same. So in some cases, like I'm trading lots, I do have these trades with a positive outcome with only 1 pip of the trade difference. Also, I do have trades with like negative outcome with 1 pip difference. And if this is like making you unhappy with the trading results, you can use flat market protection. So this is a feature just for you. So Elimtrade cannot do anything with the quotations. We're just taking them from the aggregators. But what we can do, we can cover up this tiny risks of the closing prices. Okay, so guys, let's take a look how actually the flat market protection is working and how we can set it up. So we have prepared a small video for you. So this is where you can set up the flat market protection. So if you want to trade with the flat market protection, so please go to the settings and set this up, enable this feature. So we have enabled this feature, and now in this video I'm going to trade a little bit using like $1 trades as an example. And as you can see, so these first trades have negative outcome, but this one, so here, as you can see, there is a few trades. Actually, there is like 4 trades in this video which ended up with a 0 result. Let's take a look. So this is like 0 result because we started up from the same quotation and ended up with the same quotation. So even if flat market protection wasn't implemented, the result was probably the same. So, but this one, as you can see, like I'm trading upwards. The price is 1 pip ahead from my opening price, but flat market protection is on, and so the result is 0 again. Let's take a look further. So what is going on? There is a few more trades open up. So there is actually, yeah, so there is another one. In this case, I'm trading upwards, but the price change is like 1 pips below my opening price, and again flat market protection covers me up over here. So this trade should be negative, like should have negative result, but it's ended up with a 0 result. And this one, again, we started up from the same price, ended up with the same price. So the idea is that flat market protection helps you to have some more, let's say, significant moves and eliminate this plus minus 1 pip closage in plus or minus. It's just a feature that's helping to trade in, you know, some several scenarios. So let's take a look at these closed trades. So here, as you can see, the opening price and the closing price are the same. So flat market protection didn't do anything. But here, for instance, so yeah, it's the same again, the same quotation. Let's take a look. Yeah, so it was the same. Okay, so this one, as you can see, the closing price is 1 pip ahead from the opening price, and if flat market protection wasn't enabled, this means that this trade should be positive and I should get some profit. And this is one of the most, I want to highlight this moment. This is one of the most important moments. So flat market protections is working on both sides. So it will eliminate negative trades with like -1 pip outcome, but it's also will have a zero result for the positive trades. So in this case, if flat market protection won't be enabled, I would have a successful trade, but I do have a zero result because it's enabled. And the last one, yeah, I guess do have the same result. So guys, this is what we have created. This is like our new feature, and I do have some other trades I can share on my account over here. So for instance, okay, this was successful. Let's take a look at this one. So I was trading down here, and as you can see, the final result was 1 pip up. So in a common word, I should have minus, but I do have a zero result. Again, plus or minus 1 pips, you will get zero results. This is what flat market protection is doing. So I hope that this feature will help you to have a very nice trading experience. Don't lose your nerves on this trades, because like I remember myself when I was trading, do have this plus minus 1 pip results. It's not reassuring actually. So you can use it, especially if you are like starting your trading career, or you want to eliminate this unpredictable risks on lower time frames. This feature just for you. So please stay tuned for our channel, and see you in the next videos, guys.